So, see what we got here. Hey man, thank y'all for coming back to the channel. I mean, I know y'all could be anywhere looking at anything. So, just trying to document my trading journey and everything or whatever, and put this out here for my family. And so, create a community at the same time. And I mean, yeah, that's pretty much it. I'm not trying to be no guru. I'm not trying to sell you nothing. Uh, but I'm just trying to, show y'all what's possible out here to be able to make some money and possibly leave your 9 to 5 and live on your own terms. So let's get into it. Here's the name of the group, Bollinger Momentum Traders. This is a group that I created. Let's get out of that. Let's see, make sure this is going to be the weekly recap. All right. So these are the only 4 tickers that I trade. Looking at Q's, SPY, what is that? DIA is Dow Jones, and then IWM is Russell 2000. If you want to know more about the strategy itself, go over to YouTube and check out the playlist. We got where is BMT, Bollinger Momentum Traders, right? Strategy overview. So you can check out the playlist, and then I got a few videos in there talking about the strategy. So um, here on Instagram, this was the last post that I did. See if I can get back over to that. Another profitable week, YouTube link. Click on that link. It'll take you over here to the YouTube page as well. All right. So here are the trades. I had 4 trades this week. Qs. So this was all 4 of the indices that I traded this week. It's rare that I trade all 4 of them in 1 week, but it did happen this week. So, and as promised, YouTube video will drop this weekend. That's what I'm recording right now for you guys. So, go over here to the Discord. This was the best trade for the week for the month, May 20th was 188%. We'll go over here again, going to the playlist. I think it's not all of them. Oh, yeah, right here. So this is the 100% movers group. And so right here, how I caught 188% run. So that was for last week. That wasn't this week. So I'm not going to cover that. But if you guys want to know and you want to check it out, by all means, come over here to the YouTube channel and take a look at it. This is my trading journal for this month. So May 4th and coming down to May 29th. So I had 10 wins, 12 losses, but I still had a profitable month. And a profitable week on this last week was profitable as well. So get off of that. All right. So this is the small account that I'm growing. This was Friday. This is what we started out, $2,093. The trades went in profit. So we were up $2,247. And then price dropped 1984. And then it just kind of bounced around and consolidated the rest of the day. And we ended up at $2,061 roughly. These are the 3 trades that I'm currently in. All 3 of these are swing positions. And I will show you on the charts. So make this bigger so you can see it. Scoot it over here. So we got Qs, 743 call, TNA 73 call, and UDOW is a 67.5, 67.5 call. The way I choose my strike price is the 30 delta. So, I mean, that should be known by now. 30 delta is where I choose my strike price. And so these are swing positions. So I got into these on Thursday, and I'll show you where I got into them. And then 2 Fridays is my exit, right? So if I got into it on Thursday, which was the 28th, and so June 5th, let me see, pull this up right here. So the 28th Thursday is when I got in. And then so Friday 1, Friday 2, June 5th. And so that's where the strike, the exit, June 5th, June 5th. U dial didn't have a June 5th, so I went with the two Friday or the next Friday, which was June 18th. And so that's actually, 3 weeks or whatever from that entry. Uh, if we got in here on the 28th, we got 29th, the 5th, the 12th, and then the 18th. So that's 1, 2, 3 weeks. But chances are I won't hold it that long. I'll be out of it before then. Chances are I'll be taking the exit on this at the same time that I take the exit on the other two. All right, let's jump into the charts. So QQQ was the first one. Let's see where we at. All right, QQQ. So these trades were taken on the 4-hour chart. As you can see, price was consolidating back here, back here, back here. Then it had a market structure shift, and then price started trending up. So we are in an uptrend on the 4-hour, and this is the time frame that I use for my swing trades. And so, as you can see, and I'll just zoom in here to give you a better understanding. All right, so price was consolidating here, started trending down, 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 down. Then we had a market structure shift right here. Okay, price went up, came back to try and retest, and then it broke out of the Bollinger Band here on the 4-hour. And so this would have been an entry here. Okay, price went up, came back to retest again, went sideways, and then here on this candle, as you can see, make that bigger for you. All right, so uh, price came here, broke, pulled back, broke out of the Bollinger Band. If we look at the time frame, that's 7 a.m. So that candle closes at 11. So that's in New York session. That's an entry. All right, price went up, and then it will be 2 weeks. So if we calculate the 2 weeks on that, or 2 Fridays, this was the entry here. That is a Thursday. Uh, and so from this Thursday, if we enter here, then this is, so that's Monday. Okay, so there was no Friday on that one. So then we go Tuesday, Wednesday, Thursday, Friday here. And this is the 7 o'clock candle. Closure is at 11. And so then, boom, that's where that exit will come. And then if we look at the gain on that, see what the gain is on that. We can get that bigger. $28 gain. So a 2,812 in just 8 days. All right. So that's the power of swing trading. And so that's more so what I'm going to be focusing on instead of day trading. Because day trading, the strategy is like a 50%, 52, 54% win rate on day trading. And I'm looking to get, more until like 85% is what I'm looking to get into. So, but we're uptrending here. Okay. Clearly, as the market is showing, uptrending, uptrending, uptrending. All right. Then if we got in here, next day, there's no bounce off of the top Bollinger Band. Then here on this April 7th, there is a bounce, 11. So candle closes at 3 my time. So that would have been another entry right there, right before that candle closed. Okay. And then if we measure that out, this is a Tuesday. So we're going to go 2 Fridays from that Tuesday, right? So there's the first Tuesday on the 10th, and then, first Friday on the 10th, and then the second Friday is on the 17th. Right here, 7 a.m. candle. When it closes at 11, then boom, that's the exit. You see that's 59 or $5,942 on the swing. That's two winning trades, okay? Two winning trades. And then you see this was only 9 days, 20 hours, but that's a swing. If we continue following the Bollinger momentum trading strategy for swing trades, okay, we will continue looking for price to come back into the bands, which is a no trade zone, and then pop out, which it did right here. Let's see. And as long as this is in New York session, we're taking this trade. So this is a 7 a.m. candle, closes at 11. Boom, take that trade and measure out 2 Fridays from that move. So that's a Monday. In this instance, because it's on a Monday, we could go with the Friday of that week, or we could still go with two Fridays. We can still go with 2 Fridays from that entry, right? So if we go one Friday, we go right here to the 17th, 7 a.m. candle closes at 11. That is 37, so 3,705. And if we carried it over to the next Friday, which is right here, that's April 24th, 7 a.m. candle closes at 11, and get out of that, then we're looking at 52, so $5,289. So that first Friday would have given us 3,700 roughly, and that second Friday would have gave us 5,200 roughly. Just one contract, right? Depending on where you get in. Again, we're using a 30 delta for our entry, and we're targeting that end of week. Those Fridays is what we're targeting. Okay, so and I'm taking time to explain it here on this one. I'm not going to take that much time on the next two tickers, but so this is Q. The Qs I find to be the most consistent, but they're also the most expensive when it comes to using this swing strategy. So here we are again. This was our last entry. Then we went up, came back into the bands here. That's at the end of day. And so by the time that candle closes, we will be into the Asian session. So there's a no trade opportunity. Because these are options, not futures. If it was futures, you could enter that trade on futures. But because it's options, we're waiting. Even though the candle is outside of the Bollinger Band and above, and it came off of this push right here on April 21st, we're still not taking that. We're waiting for that sweet spot where it just exited the Bollinger Band. And so we're not taking that trade. We're waiting here on the 23rd. That's the close of day. So we're waiting. And then what is this? April 29th, a Wednesday. Let's see if that candle is higher than the Bollinger Band. So we are right here on April 29th, 11. That close is 661.59, and that top Bollinger Band is 661.40. So we take that entry as well before market close, and we ride that thing for that's the entry right there. That's going. All right, that's the entry right there, and then we would ride that thing for pause, right? Let's see, this was the 29th of Wednesday, so we go 2 Fridays on that. So first Friday is right here, and then that second Friday is going to be right over here. So May 8th, go to the close of that candle, and that's 45 or 4,500 for one contract. That is 1, 2, 3, 4 winning trades in a row. Okay, 4 winning trades in a row. You're not forcing trades, anything like that. You're just following the strategy. Simple as that. Then we have, let's see, where's our next entry? Looks like we have another entry on the very next day, on April 30th. Right here. This is the 11 o'clock, so right before market closes. Take that entry and follow that for 2 Fridays. So this is a Friday. So we obviously can't, I mean, we could have did a day trade, but it doesn't make sense when you're trying to swing trade. So we'll take this for 2 Fridays. So for May, what is this? May 1st. All right. So we'll go one Friday, May 8th, and 2 Fridays, May 15th. So 7 o'clock candle right here closes at 11, and that's where we're taking our exit. So on that, we have another 42, so 4,260. We got in on a Friday on that one, so we could have exited on that following Friday, because take it same as if you had entered on a Monday and then you exit on that Friday of that same week. So let's see what that would have been if we exited on the 8th instead of the 15th. So here's the 8th at 7 a.m. We took that exit. We would have been at, let's see what we would have been at here. 39, so $3,980 is what we would have been. And if we go back, oh, I think I just deleted. Hold on. So put everything back. Back to the 15th. So we had 39.80 there. And if we go to the 15th, we have 42. So just slightly more. 39 to 42. That's the difference of what, $3,000. So or $300 in this instance, $300. So we can continue with the strategy. Okay. And with this particular swing strategy, you are not you're not over trading, basically. With day trading, you're looking for a trade every day. With the swing trades, you're waiting for the setups, and they're clear, right? You can see them more clearly. Simple strategy, Bollinger momentum, wait for the breakout of the Bollinger Band, okay? And make sure that it's doing New York session, and you take your trade. So here, this was the last trade we took on May 1st. And we're waiting here. Price did not. Let's see what the low is 68.91. Yeah, so price did not come back and touch the Bollinger Band on that one. So we're waiting. Our next trading opportunity comes on May 12th. Okay. May 12th. So if we enter here, this was 11. So we're going to enter right before market close and take that trade. All right. And so chances are we would have got stopped out on this one if we were exiting at 50%. So whatever the 50% mark is on that 30 delta trade. But let's go ahead and enter this one. This was right here. And this was a Tuesday. So we go 2 Fridays for the exit. So this was Tuesday the 12th. That's Friday the 15th. That's the first Friday. The second Friday is right here on the 22nd. Is that right? Let me go back. Where did we get in at? Got in here on the 12th. So 15, and next Friday is 22nd. 22nd at 7 a.m. and it closes at 11. Take the exit. 13, so $1,351 on that if you held it all the way through. Okay. So again, we haven't taken a loss yet if we held all the way to expiration or even day before expiration, which would be the smarter move. But let's continue going here. We are waiting for above the Bollinger Band. There's a rejection here on the 7 a.m. candle. Okay. A pin bar. So we could take that trade as well. Right here, pin bar 7. Boom, came out of the Bollinger Band. All right. That's our entry. And we'd be jumping in right here. So that was 7, closes at 11. So we're in New York session. And that's a Wednesday. So 2 Fridays, 15th Friday, going over here to the 22nd as well. And we closed that one out. And that looks like, see what this one is. 800. Looks like 800. So $800 on that trade. Okay. And then let's see where we are right now in the market. So We took that off of the pin bar, waiting for it to cross back above. All right, so right here will be the next one, May 20th. Take this trade, price rejected, came into the Bollinger Bands, came outside of the Bollinger Bands to the upside, and we're taking that trade. And so we'll go 2 Fridays from there. From here, that's Wednesday the 20th. So that would be 11 o'clock. So it closes at 3. We're getting into that trade before market close. And we are taking that 2 Fridays. So Wednesday the 20th, there's Friday the 22nd. Next Friday is going to be this past Friday, which was the 29th. 7 a.m. candle closes at 11. All right. And so then this was then $2,400 on one contract. Then waiting for price to come into the Bollinger Band, come out right here on Thursday, 7 a.m. candle. So the low was 726.41, and the high of the Bollinger Band was 725.90. So the low, so actually, because that low didn't come into the Bollinger Band and come out, probably shouldn't have taken that trade. However, I did take the trade. I am in that trade. And so I'll mark that since I did take that trade at the close of that candle. So 11 o'clock. All right. So that's the trade I'm currently in. And I'm currently up on that trade. As you can see, price is above that that light blue line. And then this was on a Thursday. So at 7 o'clock, 11 o'clock is where I open. And then we'll go 2 Fridays out on that. Let's see. 2 Fridays out on that would be, make sure we got enough room here. From here, we got that Thursday, so Friday 29th, and then the next Friday would be that June 5th contract. So we'll be over here somewhere waiting for price to close somewhere around here on June 5th. Uh, if everything holds, you know, and the strategy continues, if price continues in an uptrend, then we'll be in profit on that trade come this coming Friday, actually. So the reason I didn't take any sales is because price is in an uptrend, as you can see clearly, where price broke structure back here in March, and then it continued up, going up, up. And when we're in an uptrend, as long as the higher lows, the as long as the higher lows maintain themselves, then we should continue following structure. And that's what these dotted lines are right here. So low, high, higher low, higher high, higher low, higher high, higher low, right? Higher low is held, it's respected. It keeps going up, up, higher high, higher low, higher high, higher low, higher high, higher low. Okay. Uh, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. That low is respected. You see the wick rejection, and then price continues to push up, up, higher high, higher low, and then now we've made another higher high right here, even though it's a wick rejection, and that's where we are right now. So we are trending up. I expect price to continue up at least to 2.5, right? So on this trade, uh, if it falls more than 50%, then I'll take an exit on that and take a loss. But I expect price to continue pushing up. As of now, that's what structure is saying. That's what structure is telling us. And so that is the strategy. You know, for swing trading, it's right there in your face. As long as you see the lows maintaining and holding and not being broken, then you should not be looking for sales right now. You should not be looking for sales in this market. Okay. So I go with Robinhood. Here we are right here. QQQ 743 call. We click on that. We can see that This was entered. It's currently up. Total return is 140. Okay, 35% in profit. Date it was bought was 5/28, and the expiration is Friday on June 5th. So technically, that's that. It's 2 Fridays because the 29th was Friday, June 5th is Friday. So we're still following that rule. Okay, and then where we got in at was 397, and then current price is at 537. So we are up on this, and then the high that it hit was 740. Okay, so that's why that account has spiked. Um, what I was telling you, minimize this. Okay, there we go. So I was telling you that price had spiked that morning, and we went up to 22.47. Okay, that was because of that contract right there when it went up to a high of 740, right? And if we go over here to the trading journal, we go calculator. So 397 to 740. That trade was up 86%. And then at the close of the day, it had only gained like half of 1%. And so it was only up like 35%. But again, I still expect price to continue pushing up for the week. And so then let's look at these other two trades. We had uh Dow. That one's gonna pull up first here. Where Dow, there we go. So Dow is gonna be triple leverage ETF for the Dow Jones. All right. And so then if we follow in that same blueprint, price was trending down. Then price broke structure right here. Trend started going up, and you still had another structure here. If you want to, all right. So price broke structure up, came back for a retest, and then it broke out of the Bollinger Band. So this would have been the entry right here. Okay. And then we're riding that up uh, until the market tells us otherwise, right? And so again, coming out of the Bollinger Band here, uh, the 2 Fridays, you see price continue going up, came out of the Bollinger Band again here, 2 Fridays. And we're watching that top Bollinger Band, waiting for price to reject it. That's after hours. So that would have been an Asian market. If you were trading futures, you could have taken that one. That's a no trade. We're not taking anything to the downside, only the upside, unless that low is broken where we got into our last entry, right? So here's the next one. That is 7 a.m. So we'll take that trade. Now we probably would have lost. Well, I mean, if you exit on 50%, probably would have lost on that trade. But if you held it for the 2 weeks, chances are you would have been in profit. And then we're waiting again. So next trade would have been, looks like over here. Let's see what this is. That's a close of 61.34, and the Bollinger Band is 61.32. So that's an entry there. All right. And then the next day, no. Let's see on this one. This is a low close of 61.31. And yep, so that's another entry there. What is that? Oh no, that's 3 p.m. So that's no entry. Unless you're trading futures, you could have gotten in on that one. No trade, no trade, no trade. Here's 7 a.m. And we're looking at the close of 61.51 and the Bollinger Band 61.37. So that's an entry there. which is almost the same as the last entry. Uh, and so then we're still running. And then here we are on Thursday the 28th. And that's that entry that we took right here. Okay. So that's the trade that we're currently in on this last one right here. Thursday, candle closed, 7 o'clock closes at 11. So we got into that trade, and that is UDOW is currently in profit as well. We go over here, UDOW. Scroll down. We got in at 120 and it is at 148. So we're in profit 23% on that trade as of right now. As of Friday. We could have closed it on Friday and took that profit if we wanted to. But again, this is a swing trade. So we're holding it for that 2 Fridays after entry. And so that second Friday is going to be June 5th, which is our exit. Even though this contract is to the 18th, there was no June 5th contract that we could have gotten in. So we had no choice but to get into a June 18 contract. Okay. And then the last one, TNA. TNA. This is going to be triple leverage for Russell 2000. Okay. So using a 4 hour chart. And so down, headed down, 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 down. And then price broke structure right here. All right. And then price went up, had momentum, came out of the Bollinger Band, came back in, came back out again, 7 a.m. candle closes. And so then, boom, that's our entry. 2 Fridays, as you can see, it went up, 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 right? Then we're looking for the next one. This is 7. There's a wick rejection there. Then that'll be another entry there. That's this is Tuesday, 11 a.m. That'll be another entry there. Then we're up, right? Coming out of Bollinger Band here. 7 closes at 11. Another entry there. Not in the Bollinger Band. Not. This is market aftermarket. This is 11. So we jump in on that before market closes and ride it for 2 weeks. Okay. Possibly take a 50% loss on that within the first week. If you exit or if you hold, depending on how much you're risking, if it's a set and forget for you, and you have enough capital to hold it the entire time, and that that loss isn't going to hurt you financially. So let's see, what is this? That's 3 a.m., 7 a.m. I came out and in. So this is another entry here. A 2 week hold. And over here, this is another entry here. And so this is the strategy, right? This is the strategy. And it looks like it's going to look cluttered here. We zoom in so we see it better. All right. So where are we? We had an entry. This candle came out of the Bollinger Band, so we entered here right before market close. Next day, 7 a.m., close at 11. So this will be down here. All right. Then came down here, top of the Bollinger Band. So then that would be another entry there. Next, looking forward, come in, come out. Come in, come out. It's stuck. It's trapped. That's a 7. So close at 11. We took it here for 2 week hold. Would have been 50%. You would have lost on that. Or if you hold for 2 weeks, you possibly would have got profit on it. Let's see. This is a Monday. So that same Friday, which is there. Friday here. So that would have been a loss. on that first week. You held it till the next Friday, which is the 22nd. 22nd is here. You still would have taken a loss. And because the way options and theta decay, you definitely that contract more than likely would have went to zero, 1 cent, 2 cents, something like that. But that would have definitely been a loss on that one. As you can see, you're not gonna win them all, right? No strategy is 100%. So, but then we go. Let's see, where's the next one? Because we're in an uptrend and we see that these lows are holding, right? High, low, higher high, higher low, holding. This low is holding. Higher high, higher low, higher high, higher low, higher high, right? Rejection off the low, push up, broke the low. Okay. So then we can be looking to see if we're going to get some continued movement down on the bottom of the Bollinger Band here. If price doesn't come out of the bottom of the Bollinger Band, it respects, which it did, went to the top, popped out. Okay. Then you got structure right here. And so that structure is respected, pushed up, came back, made a low, made a high. So then you'd be entering right there as well, trying to go back to the upside on that trade. Would have been a profit right there, came back, right? All of this is still in profit if your entry is down here, all right? And then hold it for 2 weeks, hold it for 1 week, depending on when you got in. If you get in on a Monday, you can exit on that same Friday. If you get in anytime after that Monday, say Tuesday, then you can go 2 Fridays from that entry, all right? Then price came out, started breaking lows. So breaking lows, breaking lows, breaking lows. Then you had some volume here that kicked in, broke structure right in here, all right? And so then came out, pushed back up. So then you have another entry right here. 7 closes at 11. Boom, that's your next entry. Ride that up for 2 weeks. You be in profit. Come back into the Bollinger Band, come out. Where's the next entry right here? Boom. And as you can see, price is below. It did hit the Bollinger Band, rejected, closed above. So that's the entry. Price went into slight profit after hours, and then it dropped. And so then now it's trapped and it's pushing down right here. However, lows are being respected, right? This low, so that low, it got broke. Uh, broke structure right here. Broke structure right here. Okay. And then pushed up. Okay. So then you got a low, a high, higher low, higher high, higher low, higher high, higher low, higher high, right? Low, broke low right there. You could say that's a change of structure, perhaps. If you are trading with a tight stop loss, you say that's a change of structure. I would not, just because it's a higher time frame. And so I would want to see price come here and break uh, to possibly start looking for sales after that, because you'd be below the Bollinger Band as well. Okay. And so then again, you could start looking at sales at that point, but you also want to wait for that down, up, down type movement. Okay. If you get that from right here and it breaks this right in here, and you've gotten this type of formation, you could be looking at sales. It could come back up and then come back down again, right? All right. So that's what you could be looking at. So that is the swing trading strategy as well as the weekly recap. And so I will create a new playlist for the swing strategy, and I'll put this video in both of those playlists. All right. If you are looking for a community to trade with, check out the Bollinger Momentum trading group, traders community. And I hope to see you on a live one day. You can also join the Discord. Let me see where that Discord at. So Discord is right here. And here's the code. I'll copy that. That's what I'm going to be putting in the description of this video. So that way you can join the Discord as well. All right, man. That's all I got for y'all. Hope this was informative, and I'll see y'all on the next one. Peace.